Hello, test, test. Is the audio okay? Can you guys hear everything? Can you guys hear my squeaky chair? Is the audio okay? Can you hear me slurping coffee? Audio's good. Okay, so this is gonna be, we're gonna cover a lot of stuff in this stream because I feel like it's pretty important. Some of it might not be what you want to hear, but it's something that I think a lot of people need to come to grips with. Let's go ahead and fix this fib set. For some reason, every time I do this stream, this fib set is just not, the macro fib set is just not wanting to comply. But it's going to be about market cycles, and it's going to be about where I think the bottom is, where I think the market's heading, you know, all that good stuff, all the stuff that everyone's just dying to hear about, right? So let me find my Wacom tablet here because I'm going to draw some pictures for you guys. We get arts and craftsy. So on a high level, you can think about the market. If you've heard this comparison before, then this is going to be old news to you. But for those who are listening to the lecture for the first time, not the lecture, the explanation for the first time, this will be useful. So give me 1 second, my dog's, before I get started, my dog wants to go say hi to her little friend. 1 second, and then we'll get started. Sorry, my roommate's dog came in, and my dog was wanting to go say hi. So anyway, okay, where were we? On a high level, like you can think about, some of you guys are joking about talking about the cartels and all this other shit, but it really boils down to market ownership, right? Right. So if you think about market cycles, you know, they do this like semi-sinusoidal sort of thing, where it starts at a bottom, it comes at a top, it goes to a bottom, it goes to a top, right? When it hits this little dip, this is called accumulation. When it hits a peak, this is called distribution, and it happens on all levels of the market. It can happen on the daily candles. It can even happen on something as small as 5-minute candles. A lot of you have probably heard the term consolidation, right? Consolidation. Whether you realize it or not, this is part of the market cycle, consolidation. If we actually like think about what this word means in common English speak, right? In market dynamics, we talk about how volume is consolidating, right? If the volume is going down and the price is consolidating about a fixed point, maybe it's making a pennant, maybe it's making a flag. But you know, that's what people consider to be consolidation, right? But what it means really is that it means that there is an excess of supply or an excess of demand, and that needs to be focused so that the market can continue to move. That's why things like pennants happen, right? So if you have a pennant, let me see if I can find a pennant for you guys. So, or a flag. I prefer pennants. I think pennants are a little easier to trade, but if we go back to like something like a previous bear pennant, I'll explain to you like what this actually means. So here's a pennant, right? So we see, let me get a different color. So we see a pennant here, and we see it's consolidating, you know, more or less around this like midline, but we see higher lows, lower highs, and it's at the bottom of a move, right? And we also see volume consolidating here before ultimately, you know, it breaks out and we see a spike in volume and a resumption of the downtrend. So what does it really mean to consolidate? Why do consolidation periods happen? Why doesn't the market just kind of go down or kind of go up, right? Like, why do consolidation periods happen? Well, it happens because you might have heard the term a market maker, or if you're familiar with the Wyckoff term, it would be a composite operator. This just represents this umbrella term for people who control the large majority of the market share and who are actually guiding the market in a given direction. This isn't conspiracy theory shit. This isn't like tinfoil hat sort of things. This is what really happens. This is why consolidation happens. This is why accumulation happens. This is why bull markets happen. This is why bear markets happen. It's because you have large entities that buy up large portions of the market, and then whenever they're ready to move the market moves, right? So in this example right here, right? So we see a large markdown from like 17K to let's just say 10K. So basically a 50% reduction in price, give or take, right? So what actually happens when the market moves down? Well, they're selling, right? So they're selling, duh. Market can't move down without selling. So if selling goes up, buying goes down, okay? And we can relabel these things. We can call this supply. We can call this demand. So you're probably familiar with supply and demand. When there's greater supply, and you're thinking about this little scale, right? If there's more supply than demand, the price goes down, and if there's more demand than supply, the price goes up. So it's this balancing act, right? On this little like teeter-totter sort of thing. It's swaying between an excess of supply and an excess of demand. So when we start to move down in price, well, someone's doing the selling, right? These large operators, call them composite operators, market makers, whatever you want to call them, they're selling, right? They're pushing the price down. So what they're really doing is they're selling it to the public, but they're selling it to them with a catch. They're going to get it back later. They're only just lending it to you. You may not realize it, but they're just letting you hold on to it for a short period of time. And right now, this little markdown period is when they're giving it to you. But during the consolidation period is when they get it back. So you can see here this pretty clear consolidation triangle, commonly known as a pennant. Or you can just call it a symmetrical triangle, whatever you want to call it. And there are lots of variations of these consolidation patterns, right? There's like a head and shoulders, there's an inverted head and shoulders, but they all serve the same purpose. The purpose is to regain supply or regain demand. In this case, they had an excess of supply here. There was a lack of demand by the public, so the price moved down. And once it hit this terminal point with this blow off, they said, okay, there is now public selling, no longer large operators selling, and so they're going to buy it back. And so all of these represent tests of supply and demand. Whenever the market hits these new lows, they say, okay, the public's not willing to buy below this value. And they do all these tests, right, until they find a point where the bulls are exhausted, the bears are exhausted, and they've now gathered all this new supply in here during this consolidation period, and they say, okay, well, we're going to sell it again. And they're going to do this over and over and over again. And this works on the small timescales too. Like even on the 5 minute, you see little pennants breaking down. At the current moment, there's a 5 minute pennant that's playing out, and it works just the same. Obviously, low timescales are less reliable. Not all patterns play out the same, but in general, that's how it works. So even on the 5 minute timescale, we see a little pennant, right? So what does that mean? It means that there was an excess supply here, and now there's an excess of demand here, and now we're finding an equilibrium in the market before the next most likely move down is going to happen. So when these moves, especially on the higher time scales, like maybe the 12-hour or even the daily candles, these are guided by large operators. So you can imagine that as you zoom in to the smaller time scales relative to the market, there are more people that can affect these patterns. So if you're looking at a 5 minute pennant, this is the reason why they're so unreliable. So if you're looking at a 5 minute pennant, this is way more unreliable than a 12-hour pennant, for example. Well, why is that? Well, that's because on a 5-minute pennant, the supply versus demand can be tainted by so many different people, because relative to that consolidation period, there are more people that have a say in it. But when you get to larger patterns like this, there are only a handful of people that can do it, and those are the market makers. Those are the composite operators. These are the guys who actually move the market. So keeping along with this sort of idea of supply and demand and composite operators and market makers, the market goes through cycles, right? Some of you are familiar with this accumulation cycle that happened a few years ago with Bitcoin back in 2015. And it's a grueling process. It takes a lot of effort for these, we call them COs, composite operators. It takes a lot of effort for them to regain market share. So this whole process is meant to acquire market share, so that then once they control the market, they've weeded out all the sellers, they can begin the markup campaign. And then the opposite happens, right? So they now have all the supply and they want to get rid of it to push the price back down, because you don't just want to hold your assets, you want to make money off of it, right? So you got to sell it. In this case, it's Bitcoin. It could be stocks of IBM. It could be literally anything. Gold, silver, all these things do this. Anything with a vested interest and profit have these sort of activities in them. That's why all bubbles look the same. That's why, independent of what the asset is, bubbles all pop the same. They all have the same anatomy. That's why that, that meme of like, oh, it goes like this, and then it comes down. There's the bull trap, and then it goes down. And it, that's why these like bubble images all look the same. And they do. They play out relatively the same. They have the same anatomy, because it's the process that a large operator, a CO, a market maker, has to go through to acquire market share and get rid of market share to take profit. So before I get into the current status of our market cycle, do you guys have any questions about what I just said? Because I just went through a lot. I know I just word vomited all over you guys. So questions, let's see them. What does the term Wyckoff mean? It's not a term. It's a guy's name. His name is Richard Wyckoff. Richard Wyckoff. He's like the grandfather of market analysis. He's the guy that realized that this sort of activity was taking place, and he broke down and understood, really broke down the anatomy of market cycles. It's all game theory when you think about it. It's like, how do I get you to do something? Just like poker, right? So if any of you guys play poker, it's like, how do I get you to give me all of your money without letting you know that that's what I'm trying to do? Well, in this case, the market cycles, or quote unquote Wyckoff cycles, they were studied originally by Richard Wyckoff and a lot of other OG guys back in the the early 1900s. So the Winklevoss guys are doing this. Most likely. I mean, I'm not going to ascribe malice to them, but I wouldn't be surprised if they were part of that. Awesome stuff. Keep going. Thank you. You're welcome. Are there any indicators that tip off supply and demand tests? You said you're losing sound? Can you guys still hear me? Did you guys miss anything that I said? It says I'm still alive, so I don't know. Okay. So the question is, are there any indicators that tip off supply or demand tests? Yeah, so the whole idea is that there are, you got to think about it from their perspective, right? They're human beings and they're trading with other human beings. So there is an easy way or a hard way to get someone's money, right? And these happen in trading ranges. Okay, you might have seen me talk about distribution trading ranges, for example. And I can go through what a distribution trading range looks like, because we've gone through 2 of them now. So I'll show you the anatomy of a trading range. Because they have a specific anatomy and a specific purpose, because it's the most efficient way to get rid of supply without letting you know that that's what they're trying to do. So in this case, right, like we'll look at the classic one we did at 20K. So here's 20K, right? So obviously I don't need to show you guys that we had a massive markup here, right? Cool. Trading ranges are bound by horizontal channels, where there's an absolute high and an absolute low, where the market won't go above or below. Okay, this is called support, so this is resistance, this is support. And a lot of you guys ask me, I get this question a lot, it's like, why do support and resistance lines work? Why are those a thing? Well, this is why. It's because of, we call them range-bound markets. Range-bound markets. And supply and demand, support and resistance work because you have large-scale composite operators that have a vested interest in doing something. Sometimes the vested interest is buying your supply. Sometimes their vested interest is giving you their supply. And where the real trick comes is knowing which one it's going to be, because if they're buying your supply, they're going to push the price up. And if they want to sell you the supply, the price is going to go down. So how do we know which one it's going to be? Well, the easiest way, and I say easiest loosely because it's not fucking easy, it's very fucking hard, and I'm wrong all the goddamn time about it, but the easiest way is watching the volume trends on the peaks and on the valleys. Okay, so so here is a trading range, right? Here's the top of the trading range. Trading ranges always have a buying climax. So BC, here's the buying climax. It's mostly noted by a peak in volume, not always a peak in volume, but always a peak in price. Okay, so here's a buying climax. Buying climax is almost always followed by an automatic reaction. And what that is, the automatic reaction is going to be a knee-jerk reaction to the market pushing upward. And then people say, oh, whoa, time to buy, we're buying, and people are like, oh shit, it's gonna pop, and so they sell, and this is what the automatic reaction is. It's a knee-jerk reaction to a large markup in price. Okay, so we've got a buying climax and automatic reaction. Sometimes it's called an automatic rally. Same sort of idea. So we got a buying climax and automatic rally. Okay. Usually when you have a buying climax, this marks the top of the trading range. Okay. And you can see here it gets tested quite a few times. So buying climax usually marks the top of the trading range. A lot of times you can mark the bottom of the trading range by where the automatic rally stopped. So you can see here it's been a key point of interest, and once we ultimately broke below it, that's where the real markdown in price began, was once we broke this automatic rally, this automatic reaction support value. Okay. Before we see the buying climax, and this is not always so obvious, is you usually see, it's called preliminary supply. PSY is what it's usually notated by, preliminary supply. And what this is this is a test of demand based on the supply of the composite operator. So usually it looks like a buying climax. So this is what I mean by it's very difficult to identify this stuff, because at face value, the preliminary supply looks like a buying climax, right? So if we hadn't ever broken above this, you would think that this is a trading range right here. But the fact that we broke above this indicates that this trading range is invalidated. So this is something else, and this is something that can't be ignored because it happened on high volume and high price spread. So this is a point of interest for this composite operator, and this is how we start to understand the mentality of the market maker, right? So we don't know that this is preliminary supply until it isn't a buying climax. So a lot of times when you start to mark up your charts, you say, okay, this sort of activity is different than all of this stuff, right? Like it was slowly moving up, you know, volume was going up, but then all of a sudden there was a large injection of buy volume. And what this is this is a test by the composite operator to test the supply of the market. So he says, how much of this shit can I buy before people start selling? And once he does that, he marks his little top. He's like, okay, check. Here's the top. Here's the threshold of pain. Here's the line in the sand. People are not willing to buy above this. Okay? So this is why it's called preliminary supply. It's a test of the supply of the market. So he goes, okay, boom. And a lot of times, the preliminary supply, which appears to look like a buying climax, is actually the bottom of the trading range. So one of the things we like to do as market analysts, right? We want to notate this stuff. I have too many lines in here. I'll just draw it, whatever. Okay, so we have our preliminary supply. Cool. And as soon as we see a preliminary supply, we want to go ahead and just draw a horizontal line across the chart. Boom. Dude, that was a good horizontal line. I don't know about you guys, but I drew that by hand and that looks pretty fucking good. Okay, so preliminary supply. So once it breaks this, this becomes the buying climax. They can be a little confusing because, you know, you see here and you're like, Bitcoin Schmitcoin, how can this be a buying climax if there's a higher high above this? The buying climax just means like it is the peak of buying, and it's very identifiable by these large candle spread large candles with wide spread, which indicates that it's a lot of buying going on, right? So it's a lot of buying, not a lot of selling. It's covering a lot of ground in a short period of time. I got rid of my horizontal line. Damn. So then we get a buying climax, right? And then it reacts and it gets an automatic reaction. And then, of course, the CEO wants to say, well, okay, so I found the buying climax. I found the top of the market. What happens if I push above it? So he does this other test. He says, okay, I found this new threshold. What happens if I push above this? This is called a secondary test. Sometimes a secondary test like this can yield a rally, but sometimes it yields a rejection. And in this case, once it rejects this level, it begins to form the outline of a trading range. Okay, so in our case, this is going to be a distribution trading range. And a lot of times what happens is the composite operator says, okay, this got rejected. What happens if I brute force this thing? Okay, so the market rejected this value and is climbing down. If I brute force this, will there be a rally? And if so, I'd like to give out my supply to the market. So what happens now? Okay, so it comes down. He's like, okay, we're here. So it's like, you know, he's a boxer, right? He's sitting in the pocket. He's waiting to land his knockout blow. And all along the way, he's selling his supply to the market. So his market share is decreasing, but he doesn't care because ultimately he cares about this, right? So right now, we're doing the secondary test. He prods the market and he says, what happens? Okay, what happens if we break this level? Boom, it gets rejected. He says, okay, that's interesting. But what happens if I brute force it and I just buy a shitload of supply and push the market up? What happens then? So we see here, he pushes the market up, but it's on low volume here. This is a dead giveaway. This is where your eyebrows should raise. We just broke a new high, volume's low, what's happening next? This is what we call an up thrust. Okay, a UT. It's a temporary test of the upper limits of the trading range to see what happens from the retail investors. So it differs from this, right? Because we see this occur on increasing volume. So this is not an up thrust. Once this breaks the trading range, what we thought was the trading range down here, the volume increases, right? It increases to a buying climax. But this time, when you break above, the volume doesn't do that, right? Where's the volume? That's because the CEO isn't buying anymore. He has a vested interest in selling. He's not buying anymore. He says, okay, people aren't buying. Well, I'm not fucking buying. Time to start marking down the asset. So we see here, this is why I've said a couple of times, if we return back to the trading range, this is bearish. If you see my previous streams where I talk about a test above the trading range is likely to happen, but a return into the trading range is inherently bearish. It's almost always bearish. There are some exceptions, but I'm covering the broad case here. Okay, so continuing along with the composite operator logic here, right? So we see a breakout here, and it traps a lot of the late bulls, the guys that are like, ah, fuck it, you know, I'm gonna buy now. You know, you see the FOMO, right? Your fear of missing out, and they trap the last guys here. But this is where it starts to get interesting here, right? So we see the upthrust. People are like, oh man, Bitcoin to the moon, Bitcoin forever, blah blah blah. So what happens next is now it returns to the trading range. We see what happens, right? We see a large spike in volume as it comes back down, and look, it makes another test of the bottom of the trading range. So now he's saying, well, what happens if I shove that? What happens if I brute force the price down? So this was a brute force price test of the upper boundary. Then he does it again. He says, okay, what happens if I brute force it down? He's measuring the reaction. He's sizing up his opponent. He's saying, he's the professional boxer. He's the Floyd Mayweather. He's sitting there saying, well, if I do this, what do you do? If I do this, then what do you do? Ah, now I see what you're going to do. And now I know how to land the knockout blow. He's measuring you with every single prod. Measuring you here, measuring you here, here, here. Okay, so now he says, interesting. So we bounce off of here. What happens now? Well, now he starts. This is where the real trickery starts. Is in the latter half of the trading range. There's a phrase that Bruce Frazier, he's this guy that renowned Wyckoffian. He talks about one of the key signs of a distribution trading range is that it begins and ends with volatility, right? So it begins and ends with volatility. So people in here who try to attempt this part of the trading range, they usually lose their ass. This latter half of the trading range is meant to stop out as many people as it can, right? So that's why we see things like this. We see a W bottom here. This is typically like, oh man, you buy this, right? You see this, it's sometimes called a double bottom. Very classic move. People say on the breakout of the neckline, you buy, and so it traps a lot of bullish investors. But what happens, right? We start to see patterns that fake out the market, and they're intentional. These are 100% intentional. These aren't accidents. We see things like W bottoms fake out and break down. We see failed inverse head and shoulders. We see, we can find a lot of other examples, and I'll run through them. But these are 100% intentional to fake out the market, because what happens, right? So we see a W bottom, and if you're a breakout trader and you see a breakout of the W bottom, you're going to start buying. Perfect, right? You fell right into the CEO's trap. He wanted you to buy this breakout so that he could sell here, right? So he sells here. Then the market falls down, right? Boom, test the preliminary supply again. And it tests it in the shape of an inverted head and shoulders, right? So he goes, ha, I got these motherfuckers. I got them. They're foaming at the mouth to buy right now. So we see an inverse head and shoulders. We see him make it, and he goes, okay, we're going to do it again. We're going to see how high we can push the market, right? So he makes this inverted head and shoulders thing. Everyone's like, cool, I'm going to buy the breakout. And he does it again, traps the bulls up here. So now you've got, if you're unleveraged, you're in a really dangerous spot, because you've now bought here and you've now bought here, and he knows it. He knows it right in here There's a pocket of bulls that are just waiting for the breakout. And soon, they're going to capitulate. And most likely, they have their stops somewhere in here or somewhere in here above the previous highs, and he knows it. Okay, this part is called last point of supply, LPSY. And just for your reference, this terminal test of the trading range is called a sign of weakness. Not entirely relevant, but just thought I'd let you know. Okay, so this is when it starts to get sketchy, right? Because now people are like, well, what happened? There was a double bottom that failed to break out. There was an inverted head and shoulders that failed to break out. Like, what the fuck are we doing here? These don't fail to break out because we're in a, they think we're in a bull market. Like, why is this happening? And so they're in denial. And so they keep all these longs, all these long positions that got bought up in here. They're like, well, what do we do now? Because we bought all this shit in here. They most likely have their stops right in here, right below the previous lows. And so they're confused. And the CO knows this, right? And he's got all the supply that he still has yet to give out to the public. And he's like, I got these guys. I got them trapped. And they can't sell because then they're going to lose profit. And so one of the key signs that we see here is that we see lower highs, right? So we see the upthrust, boom. We see a lower high here, and we see this fake out to a higher high, which traps more bulls. But it's a trap. And you know it's a trap because it never breaks above. We're returning back to the buying climax here. It never breaks above the buying climax. And this is a dead sign that something's not right here. You should be looking for an exit with your longs. And you see this failure to test the high. And this is bad news. This is last point of supply. This is the highest the market's going to go. Sometimes you get an upthrust after distribution, but not always. Okay. So now the CEO goes, boom. Doesn't quite test the low, so he doesn't stop anyone out. And now what he does is he makes this giant bear pennant. Right? And so people are like, oh, we're in a bull market. This bear pennant, it's not a bear pennant. You probably saw this all over Twitter. The people were saying this isn't a bear pennant. This is a symmetrical triangle, and symmetrical triangles can break up. So in a last-ditch effort before he breaks out of that trading range, he goes, okay, I'm going to make one last test to trap these guys. And so that's why we see such a violent drop in price, and it's very sudden because he wants to stop out every single person that bought in here. Everyone that bought in here is going to get stopped out by his move out of the trading range. Boom. And it happens violently. It happens on high volume. And this is how you know that we're about to begin markdown, right? So if we go back to the market cycle, we see accumulation, right? We see mark up, we see distribution, and then we see mark down. And once we exit the trading range from the bottom here, that's when it starts to get sketchy, because then we know that the CO does not want to buy anymore, and he has a vested interest in pushing the price down. Okay. And from there, we can get into more detailed markdown prices, but in general, that is the gist of how market cycles begin and end. Again, I just threw a lot of information at you guys. If you have any questions, let me know, and let's break this down since we have the time. Let's hear it. The Bollinger Bands is just clutter at this point. Yeah, I probably should have taken that off, but sorry. Let's hear some questions from you guys. Do these apply on micro scales as well? Yes, they do, actually. They do apply on micro scales, and I'll actually go over some examples here in a second. Are you saying that pretty much the whole TA means shit and only Wyckoff and B-bands are valuable? No, I didn't say that at all. They work in harmony with each other. You know, this is it's a team effort. They work in, it's, Wyckoff is TA. TA is Wyckoff. You just probably just don't know it, but it's all the same shit. I find Wyckoff to be way more valuable and gaining insight in the principles that Richard Wyckoff teaches or taught. Because right now, if you're using quote unquote TA, you're getting fucked up in here. In this market right here, you were getting eaten alive if you're trying to apply low time frame TA to this stuff. And I'll explain why in a second. Is there a way to determine when the CO is ready to buy again? Maybe based on the beginning of, yes. So there, just like how I said, there's a way to identify the top of a market, the quote unquote distribution trading range. There's a way to identify the bottom of a market, and that's called the accumulation trading range. And we can go into detail about that as well. What I'm saying is the whole TA without Wyckoff is pretty much useless. No. That's not what I'm saying. I didn't say that at all. I'm saying that you get an incomplete view. You know, if you're trading in a bull market and you're trading just standard, you know, patterns and volume, you can do very, very well because the CO is letting you do well. But whenever you're counter trend trading what the CO is doing, you're going to get eaten alive. And that's what's happening to a lot of people right here. I'm a total noob. Does this basically constitute market manipulation on the part of the CO? Yeah, every single market is manipulated. Every single market, whether it's gold, whether it's, you know, whether it's precious metals, whether it's stocks, whether it's Forex, they're all manipulated to certain degrees. Any suggested reading resources? Yeah, so what I found really, really valuable is this series of articles by Bruce Fraser. I could post a link to that. He puts out, I think it's like weekly or monthly or whatever it is. He has a blog that he posts out, just different market examples of using Wyckoff principles, and it's been invaluable to me. There's also another, let's see if I can find that if I still have it. Google Anatomy of a Trading Range by, where's that dude's name? I think if you just Google Anatomy of a Trading Range, I'll post that in there as well. Anatomy of a Trading Range. Yeah, Jim Forte, that's what it is. This is a great resource. First link doesn't work. Okay, well then here, just type in here, I'm gonna Google this. I don't know why it's showing an error, but just Google this, it'll be the first link you find. Those two resources, invaluable. Do you guys have any questions about the distribution stuff before I go any further? And if you understand this stuff, it's going to start to make the charts that I post with all like the abbreviations and channels and stuff on it. It's going to make all that stuff make complete sense if you can get a grasp on these concepts. And this, don't get me wrong, it's not fucking easy to understand it. Yes, what JR said. Google that stuff. Looks like that. It looks like that. Many things make sense, but when you are looking at it, it's hard to realize. No, I completely understand. When you're in the mix and you're actually like trying to figure it out, it's fucking difficult. It's very hard. I hear lots of him complaining about whales manipulation, but it seems like this is just how it works. Yeah, dude, people only complain about whales manipulating the market when the price goes down. But when the price goes up, it's manipulated as well, man. So it's best to look at daily candles. It's easiest to look at daily candles to get a clearer view. 6-hour candles are great too. 4-hour candles are great too. You know, anything lower than that, and it's kind of granular. Does Wyckoff lose accuracy and lower liquidity assets? I don't think so, because the principles are the same. It's testing the tolerance of buyers and sellers, you know. Can you go through this? Okay, this is great. Can you go through the second distribution TR, the 11K one? Want to know your final view? Yes, we can. Okay, and this is important because it's very fractal, because it's, well, we'll talk about it. Okay, so let me, what's the best way to do this? Let's get rid of the Bollinger Bands and the EMAs. I'm gonna leave all this other laser light show shit on here for now. Do I want to do that? Yeah. Okay, so let's, this is the 6, yeah, okay, let's do this. Okay, so here's the previous trading range, right? I'm gonna go ahead and relabel this real quick so we can just draw comparisons because it's important. So preliminary supply, buying climax, automatic. Should I do this in black? Is that better? Do it in black? Yeah, let's do it in black. Preliminary supply, buying climax, automatic rally, secondary test, up thrust, sign of weakness. We can call this a secondary test. Really, we should just call this last point of supply right here. Last point of supply, last point of supply. And this also would be considered last point of supply as well. Last point of supply. Okay. So let's keep this in mind here. I'm going to attempt to label this thing. Well, fuck it. I'm gonna zoom in. Just remember these markings, right? Let's do it like on the 4-hour view. So So this one's a little bit more difficult to identify, because if you're not sure what you're looking at, it's not inherently obvious, right? So okay, so we see a preliminary supply here. Here we see a buying climax. Here we see a secondary test. We see a sign of weakness. We see another secondary test, and then markdown, and here's last point of supply. Okay, so remember how I said before, the failure to break above or retest the high is inherently bearish, and if you break above the trading range, it is it's bearish as well. So you can obviously label this a couple of different ways, depending. It just depends on how you want to view it. So you can view it like this. You can view it like you know, this is the trading range, and that this is an up thrust, and this is a buying climax, and this is preliminary supply, and this is sign of weakness. This is an up thrust after distribution, and this would be like last point of supply or something. Last point of supply, right? So either way, however you want to view it, what's important to note is the volume. So it's what's really important is the volume here. So we see here the first time we tested this high, it happened on, you know, okay volume, but the second time we tested the high, dead giveaway, it was an up thrust. It's all like there's no volume there, right? There's no volume there, and it fails to break above this trading range. And what's also important is that the first time we broke above the trading range, first time we broke above the buying climax, we immediately rejected it and came flying down to this price level here. Okay, and the second time we broke above the trading range, we couldn't hold it, and we blew our wad and came flying back down on low volume. And then as we came in, the price or the volume started to accelerate. Okay, so this is the anatomy of the lower time frame distribution range. And now, of course, you know, we see a last point of supply, and we're beginning to mark down because we exited the trading range. Now we're heading toward our local bottom. And if you're confused about what this stuff is, these are just supply and demand channels. So if we look at it on the larger view, 362. If we look at the larger view here, the market is bound by supply and demand channels. So here, this dotted line, here and here, a breach above this rejects it, and a breach below it pushes it up, and obviously a very low breach below the demand line comes flying back up. And it works on all time frames, right? So we have this is the 6 hour, but if you look here, we see a very clear supply and demand channel. And now here we see a very clear supply and demand channel. So if we compare this to this, you know, it's right in there. So I see a distribution that exits with a supply and demand channel here, then another distribution with an exiting supply and demand channel here. Okay. Any other questions about this distribution stuff? Do CEOs care about long-term TA like parabolic uptrend channels? Yeah, of course. So that's why I have it on my chart. So we see a parabolic curve here. So we see a parabolic curve. And typically a breach to the top of the parabolic curve is called a hypodermic trend. And when it breaks above it, that's typically a pretty dead giveaway that the market blew its wad because it can't sustain this upward momentum and it marks down. And the whole time, the CO, the reason why this breaks the parabolic trend to the top is because the CO wants to spark FOMO so that he can sell it into the buyers, right? So he accumulated all this supply down here, right down here. The fuck? He accumulated all this supply down here, and he wants to sell it to the FOMO buyers, the retail investors, mom and dad, right in here. That's the whole point. This is all planned. This doesn't happen on accident. This doesn't happen because Bitcoin's super cool. This happens because a handful of dudes with a shitload of Bitcoin want to get you to buy it so that they can make their profit and then, you know, buy an island or whatever they want to do with it. But this happens because of this accumulation down here. That's why parabolic markets exist. That's why parabolic blow-off exists. It's all a clever move by the CO to get you to buy his shit. It's basically what you can take away from that. So this TR was more difficult to spot in time as there was no retest of the preliminary supply. What do you mean? There were a couple tests of the preliminary supply. There's a test right here. There's a test right here. The sign of weakness is the breakdown below the preliminary supply value. Like, this is all a test of preliminary supply. Right? So just to put it into perspective, this is the same thing as this. Can you compare channels in terms of the size and the move? Will this markdown be smaller in price and time than the last 6K move we saw? So yeah, I mean, you can just, there is an actual way to measure the effect of a distribution trading range. Full disclosure, I'm not good at point figure charts, which is what you use. I mostly just use it to identify the trends and the channels. But you can think about it relatively, right? Like a large distribution usually has a large markdown, and a small distribution usually has a small markdown. And likewise, a small accumulation has a small markup, and a large accumulation has a large markup. How do you interpret the recent volume increases? Well, that's characteristic of markdown. So we see the volume going up here and the price marking down. Likewise, as we mark down here, we saw volume going up as well. Or I guess it was more like right here. Large volume on the way down means that there's a lot of supply being unloaded onto buyers. How do you recognize the levels that sign of weakness will get to once we recognize the first preliminary supply? So that's a good question. So if I'm understanding your question correctly, it's how do we know where the oh, I have this mislabeled actually. This should be here. Come to the front. Visual order. Bring to front. So the question is, how do we know, if I'm understanding it correctly, how do we know where the sign of weakness will stop? Is that what you're asking? How do we recognize the levels, that sign of weakness? We'll get to you once you recognize the first preliminary supply. So that's difficult. That's really difficult, because what can happen a lot of times is that the sign of weakness sees very little bounce and it continues downward. So it's hard to take a speculative position with a sign of weakness. So that's not immediately obvious. What is something to keep in mind, though, is you see here how it consolidated below the preliminary supply and the volume consolidated here. This is something that should be raising your eyebrows, how we see. Let's zoom in a little bit. So we see here we made a low, we made a lower low on lower volume. So just like an up thrust, right? Just like an up thrust, how I said, if it makes an up thrust out of the trading range and it's on lower volume, that usually means it's going to come back down. Same thing here. So if we make a lower low here on lower volume, usually that means that there's not a lot of supply here. We're lacking supply here. So you could take it. It gets very difficult. So you could take a speculative position to go bullish, but that would be counter trend trading, and it might bite you in the ass. You just got to play it by ear. But the level to watch is the preliminary supply, support here, and then resistance here. So break above this would obviously mean that we're breaking back into the trading range, and that it's going to move back upward, and that you have a better opportunity to short or sell or whatever you're looking to do. But in the moment, it's not immediately obvious. So you have to keep updating your charts. What's the volume doing? Right here, for example, right? So we made a low, and we made a low, and volume increased. So this was a good indicator that this inverted head and shoulders thing, this little bro right here, is seeing good demand, and that supply is not immediately abundant. So you could take it on the right shoulder. You could take a speculative position that it's going to bounce based on supply and demand here. I'm taking the Wyckoff Learn Crypto course, and it doesn't seem to have as much information unless I didn't get to it. Doesn't have as much information as what? What I'm providing? Or what do you mean? So guys, I mean, also, you can see now that it's been an hour and I'm like sitting here explaining it as best as I can, and it's a lot of material to cover. So you can imagine that the questions that get asked on Twitter, it's like damn near impossible to accurately answer it. So I really have to recommend that you check out my trading community. Like, if you found this information helpful, and because we're in a bear market, I figured I'd give a discount, so I'll go ahead and plug my trading community before we continue with the material. But if you go to my website, bitcoinschmitcoin.com, and you use the coupon code BEARHUG, you get $50 off your first payment. So that's 50% off. So if ever you were trying to join my group, now's the time to do it, because this coupon code isn't going to last forever. I've been getting a large influx of questions that I can't answer, and so in an effort to help as many people out as I can, I figured I'd throw out the coupon code out there. So check it out, bitcoinschmitcoin.com. Could you please share your short-term projection? Well, what define short term? What do you mean by short term? Do you use TradingView alarms? Yes, I do. Where do you think the trading range for reaccumulation? 2K to 4K? For accumulation, I have. Okay. So we can continue with the discussion here, because this is where it starts to get really interesting. It's like, well, what happens next, right? So there's a very strong confluence of support and resistance here. So if we look at the macro scale, let's look at the 6-hour view. There's almost to the fucking dollar value, and this is crazy because I love looking at this kind of stuff. There's a confluence of Fibonacci levels here. Okay, so if we look at the daily, I'll show you what I'm looking at. If we look at the daily, let's get rid of you here. These are the daily candles. So we see a fib set. I'll go ahead and draw here. So if we draw two fib sets, the bullish and the bearish fib set, or I'm sorry, the two bullish fib sets, one from the bottom of the parabolic curve at 221-ish to the top, which is this, approximately that value, we see that we're testing and broke the 61 here, and we bounced right off the 78. So there's two fib sets here. Let's zoom in a little closer, and I'll show you which ones I'm dealing with here. So if we take the V bottom here to the top of the trading range, we get another fib set right here. And we see that we broke the 61, broke right through it. So this is the macro. We broke right through the macro. And now on the smaller time frame, we bounced right off the 78, like perfectly off the 78. And right now we're in this like weird little band, right? But if we look below it, we see that the 127% extension of this fib set is right here. And the macro 78, which is the one below this, right, is there on the exact, they're off by literally $1. Literally $1. So there's very, 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 very strong support right here at 44.50. Did I say that it's very strong support? I'm going to say it again. There's very strong support there. And it lines up, right? So we see, you know, this is a trading range right here. We see a previous trading range occurring right here to further bolster our opinion of that support there. So this is a key level that I have my eye set on here, right? So with that in mind, let's look at the smaller time scales. Is there a way to identify the bottom? How do you estimate the bearish market is going to end reverse long term? I'm literally talking about it right now. Just sit back. So I was digging through some of Bruce Fraser's stuff, and I found this really great historical example. So we'll go ahead and put this on the chart. Whoa. The dog's barking at someone in the pool. Jesus Christ. Sorry, I'm preparing a chart for you guys so we can compare and contrast. Okay, so let's go ahead and put you. Can I not zoom out? If you've been following me on Twitter, you know which one I'm about to put up, but we're going to talk about it because I think it's important. Yeah, that's good enough. Okay, that will do. Okay, so I believe we're seeing something like this. This is an accumulation. This is an accumulation trading range. I believe this This is my best estimate right now. I believe we saw our selling climax here. So here, we saw our automatic rally here, and I mean, it looks spot on, right? So we can go ahead and do this point for point, volume and price movement. Spot on, right? So let me get my volume in the mix here. So this is an historic example with eBay of an accumulation phase. So we see, very similar to what we had, a clear markdown, this little like bear pennant thing, and a sell-off here, right? So we see a bear pennant thing and a sell-off here to a bottom, right? In this case, we had a V bottom, a very aggressive selling climax, followed by an automatic rally here. And we even see this little micro distribution trading range here. Same thing we had here with a double top. So we see a top and a failed retest of the high. So we see a top and a failed retest of the high and a slow bleed out. And what I have my eye set on at the moment, let me slide this over a little bit, where I'm mostly watching is for a bounce off of this zone right here, off of this 78. And you can't see it right now as it's off screen, but this value right now, which is the macro, let's say macro 61% fib value here, and whether or not it provides strong support or not. Usually, and I say this as usually, not always, the macro fib lines provide very strong support and resistance. So a typical breakthrough the fib line doesn't happen in one clean go. Usually it takes multiple chiseling away at this value before it actually gives way and breaks. So I'm looking at this as an opportunity to either go long or reshort higher, one of the two, right? So far it's following this very cleanly, and so we can go through this volume profile together, right? So we see the selling climax here, and it goes down, right? Selling climax here, it goes down. Then we enter this trading range right here. Let's label you red. So trading range right in here. Then we get a trading range right in here. This is our distribution, right? And on the tail end of the distribution, we see a climb in volume, and we see a climb in volume here, right? And now we're nearing the previous low, the selling climax. We're nearing this value. We're nearing here. And it stands to reason, as we're testing this very strong support at macro 61, the micro 78, this is going to be a large source of support here. And it's currently doing the tests right now. That's not to say we won't make a new low, but it's not going to be a clean break, I don't think. Obviously, it could be wrong, but I'm expecting to see a bit of a bounce here, and something like this to further lure in bullish investors here. So I believe, my personal opinion, is there's a very strong candidate for this being a, so let's go ahead and relabel this. So selling climax, automatic rally. So here's the double top sort of thing. And I think we're nearing the secondary test here. So I think there's a very strong case to be made that we see, some sort of rally to about 10K, maybe to retest the bottom of the trading range. Something that comes, right in here, where you see how it retests the trading range here. Let me see if I can erase this. Can I erase this? Yes, cool. So we see here this distribution trading range. It comes right back inside it, and then boom, we see the spring. I think we're nearing something like that. So I wouldn't be surprised to see a lower low, but I most definitely wouldn't be surprised to see a rally to retest this value right in here, for ultimately we go down and hit the, what did I say it was? 4,005 or 4,050 value. And that is going to be where I think the spring will terminate, right in there. That's my best guess right now. So far it's lining up, you know, that's where my eye is currently cast at the moment. And that's where a lot of people in my trading community are currently watching. So again, I can't recommend this highly enough. If you're interested in this stuff and you want to be in touch with my personal opinions and my constant analysis of the market, join my trading community. Go to bitcoinschmitcoin.com. That's the best way. I can't sit there and I wish I could. I wish I could answer everyone's questions on Twitter, but it's just not feasible, you know? Oh, 44.50. Sorry. Yeah, sorry. Not 40.50. I misspoke. I meant to say, what is it? 44.50. Did I move this fib set again? Where's my 44.50? Dude, I cannot stop moving this thing. I don't know what the hell's going on. Something like that. Go ahead and lock you, for Christ's sake. So something down here. Right in here is where I think the spring will ultimately find its bottom around this price level right here. Which looks like, if you're looking at it from the log scale, it looks like it's like, oh man, this is so far away. But you know, this is only like 1,500 bucks below this. So. How much time do you spend on average in the Discord every day? A lot. I mean, more than 12 hours a day, I'll tell you that much. I'm there. I mean, everyone who's in my trading community can attest that I'm there all day. Unless I go on vacation, but that's to be expected, right? Obviously, though, this isn't spring to the moon. We'll be looking for a new accumulation phase. Is there a relationship between the duration of the distribution and the length of the accumulation? It's usually the opposite. The length of the accumulation typically yields, so a larger accumulation will yield a larger distribution, right? Because they have to get rid of the asset. They acquired a lot of the asset and they have to get rid of it. I don't know that there's like an equation or anything like that. I'm sure that I mean, maybe there is, and I'm just totally ignorant to it, but I'm not aware of that. What's your estimate with how much BTC USD COs operate? So I can't remember where I saw it. I was reading some Bruce Fraser article, but he was arguing that for any given trending asset at any given time, 80 to 90% of all market activity is sponsored by the composite operator. What that equates to with circulating supply, you know, that's up for debate. But it's enough to control 80 to 90% of all market activity. Sorry for the dumbass question. What the fuck is CO? That's the composite operator. I talked about it in the beginning of the video, so I would recommend just rewinding it and checking that out. Do you have an estimate for when the bottom will occur? No, you really shouldn't think in terms of time with this stuff. Think about it in terms of price objectives. It's not time. Like, don't think about it like, we have until next week until this thing can fucking bounce. Otherwise, it's like, we have a deadline to meet. You know, it's not like that. It's like, these are key price levels, and we hover around price levels. We hover around price bands, right? This doesn't have a time, this doesn't have like an expiration date on it. It's like, we're here until we're not. Right? We're here until we're not. And then we're here until we're not. That's the best way to think about it. Don't think about it in terms of time. People ask, I don't know why people ask that all the time. It's kind of weird. Just want to say thank you. Good stuff. Well, thanks. Thanks for joining in. So the 4K drop might take 1 year. I don't know what you're asking. Do you have any views on alts? Like, looks like only thing that's happening there is people leaving alts. Yeah, so that is, so once you understand all this shit, right? All this stuff I've been talking about in here, once you understand that, then you can extend that to the relationship between Bitcoin, the alts, and USD. And that gets a little bit more meta than what we've been talking about. So I don't know if I want to actually go into that because it's a little bit more difficult to explain, but there is an ebb and flow between there is a cycle between alts, Bitcoin, and the USD pairs. They don't exist independently. The money's sloshing around somewhere, and the key is to find out where it is. Right now, I think what we're seeing is an exit to USD. So it'll go something like this. The accumulation will go USD to Bitcoin, Bitcoin to alts via BTC alt pair, and then ultimately alts will go to USD and BTC will go to USD, and we start the cycle over again, and then it goes USD to BTC, BTC to alts, alts to, that's why we see seasons. That's why we see alt seasons. That's why right now all of the alts are shitting the bed, and they're doing it on low volume too. Like if you look at Ether Bitcoin, for example, it is fucking plummeting, but it's doing it on like super low volume, right? We're actually seeing some buy up on, so, but like, check this out, for example, right? Like Ether Bitcoin is plummeting. Why is this plummeting on low volume? Where's all that volume? Well, it's because they're not doing it via the ratio. They're selling it on USD pair, right? They're not selling Ether for Bitcoin. They're selling Ether for USD, right? That's why we see the high volume here on the USD pair. So there is an ebb and flow between the alts, the USD, and the Bitcoin pairs. You gotta time it. You gotta know what you're looking at. You said price might test 45.50 support, I believe, but time does not matter. So can it take up to 1 year for Bitcoin to drop or no time at all? Just stop thinking about time. Do not think about time. Don't worry about time. Don't worry about like this is going to happen next week. That's not what market analysis is going to tell you. It's not going to tell you when shit is going to happen. When shit is going to happen. It's just going to tell you what's going to happen, or what's most likely to happen. What's statistically favorable to happen. That doesn't mean it's always going to happen. It doesn't mean this is definitely going to happen. It just says there is a statistically this is most likely to happen. That's what you can take away from that. BTC pairs usually tend to have better prices than Ether. I don't know what that means. Does the CO have to redistribute and reaccumulate faster now because crypto awareness has... Okay, so the question is, does the CO have to redistribute and reaccumulate faster now because crypto awareness was increased compared to past cycles? How long would reaccumulation be this time around, you think? Again, don't think about it in terms of time. You're going to drive yourself crazy trying to be like, man, it's been at this price level for too long, something's wrong. Don't think about that. You think about it in terms of price objectives. And with volume is going to be the key here. With all these market cycles, volume is key. It's going to give you insight. It's going to let you know how much of the asset is accumulated, when you're ready to break out, when you're ready to mark up, and all that good stuff. Is there some reason that Ether keeps falling? Yeah, we're in a bear market. Everything's falling. I think people are asking about time because not all of us want to be watching the charts every day. Well, you don't have to be watching the charts every day. Just set your buys at known price objectives and go on holiday, you know? You don't have to be sitting there staring at charts all day. Just if you know key price levels, set your buys there or set your sells there or wherever you think, you know? So I have a question from my trading community. If we don't see an influx, what does it say? If we don't see an influx of buying at the spring, is it possible that we continue into markdown into new distribution trading range? That's not necessarily the case because there are different kinds of springs. That you can have a low volume spring, you can have a high volume spring. You know, it's case by case. There's no just clean answer for that. You guys have any more questions? I'm gonna go get some more coffee and I'm gonna hang out with you guys for a little bit longer and answer all your questions. But give me like 2 seconds, and I'm gonna go get some coffee and I'll BRB. Okay, fresh cup of coffee. I pet my dog. Let's do this. Okay. True about time. So the question is, true about timing not being important. Just wondering about the CO strategy has to change now that crypto is the radar of lots of people. Blah blah. Yeah. Any opinions? Which exchanges do I use? I recently switched over to BitMEX. It's fucking awesome. I don't think I'll ever margin trade on anything other than BitMEX again. But once it becomes alt season, I'm gonna switch over to Binance for my alts and all that other good stuff. Yeah, but for margin trading, I'm using BitMEX. Any opinions on the bounce of the last few hours? Yeah, so interestingly enough, I'm surprised this is still relevant. Obviously, I mean, maybe there's just an obvious reason for this that I just haven't figured out yet. But so here's my past supply channel. So supply, and it's been support this whole way down. So that's interesting. And I currently bounced right off of it. It also bounced right off the 78. So, yeah. I'm surprised it's still relevant, but I'm sure it makes sense for some reason. Rip Bitfinex still charting it though. Yeah, Bitfinex is still great for trending. I still chart on Bitfinex for sure. What's your nickname? Bitcoin Schmitcoin. Do you see BTC going to an all-time high after the bear market is over? I mean, I don't see why not. That's what it's done 5 times before. Especially with like the new advances it's done, you know, with the Lightning Network and more visibility from mainstream adopters. And yeah, I mean, I don't see why it wouldn't, for sure. Just got here. See 4,500 is an area to watch. Thoughts on possible lowest low it could hit? Dude, I have no idea. If I mean, I know why people ask that, but you got to think, like, if I knew that answer, I would be a gajillionaire and I wouldn't be doing a stream, you know? How painful is tax season? Yeah. Jesus, I don't want to talk about that. Just got here. Okay. Blah, blah, blah. Okay. All right, do you guys have any other questions about these market cycle stuff? We've been streaming for how long? What is this? Hour and a half. So decent length. Decent length of time. I'll take this moment to plug my trading community too. You know, go to bitcoinschmitcoin.com if you want like a constant stream of my thoughts. I'm always there. I've been going over my trades recently too. Posting when I go long, when I go short. So if you're interested in that kind of stuff, I've been pretty active in discussing my trades and why I'm trading the positions I am. So go to bitcoinschmitcoin.com and use coupon code BEARHUG to get 50 bucks off. Go for it. Recommend it. If you want to be in constant contact with me, that's the best way to do it. Thanks, bro. Made 40K because of you. Oh, did you? What did you make 40K on? Like what specifically did you make 40K on? Question is, what percentage of your trades would you say hit stop loss? I mean, over half, for sure. But that's just risk management, you know? That just happens. You're not gonna win every single fucking trade. Tax tip number 2, if you are a reliably profitable trader, you can pay almost 0 taxes if you move to Puerto Rico. Yeah, I know. I was actually, I've been mulling that over about moving to Puerto Rico because they also have like no property tax. There's a lot of tax havens in Puerto Rico. I'm honestly considering buying some property down there with my sick crypto gains. And I don't know, just looking nicer and nicer every day. So a question, will the market maker like JP Morgan and banks in general enter the market at 4.5K, or do they have no interest in Bitcoin at all? No, they 100% have interest in Bitcoin. They've been in Bitcoin. They're most likely the ones who orchestrated this accumulation phase a few years ago, 4 years ago. You know, it's all a clever ploy. You know, they bought it all down here. And then again on these little dips, and most likely bought here and pushed the market price on this parabolic trajectory here. But yeah, I wouldn't doubt it that they're going to buy this zone right in here. I heard there were a bunch of people, a bunch of crypto traders building a town in Puerto Rico. Yeah, I heard that too. Property is like, I actually just went to Puerto Rico last week, and weather is beautiful. So if you like hot weather and not humid climate, Puerto Rico is amazing. You know, they're having some struggles right now with rebuilding the infrastructure, but they're getting there. And right now, property is really cheap. I mean, for obvious reasons. So, could be a great investment to invest some crypto profits on there. And hot women. Yeah, God, Puerto Rican women are so beautiful. And their men. God, their men are beautiful. Do the market makers ever fear chasing too many people out of the market? So I think so. I honestly think so. I think that that's another main reason why trading ranges occur. It's because you don't want to drop the price too fast. The whole goal of the trading range is to dangle the carrot in front of the investor, and then as soon as they go for it, you pull the carrot, right? You don't want to just leave the carrot way out in front of them so that they're like, man, I'll never get that. You want them to remain hopeful. So you don't want to crash the market too fast, obviously, because it bleeds into your profits. If you are the CEO, you want to sell slowly so that you can retain as much profit at higher values as possible. But obviously so that you don't just like run off investors as well. So I think that is another part of it as well. So let's talk about some trends actually. There are a couple things I'm watching right now. So one of which, there is a potential setup for a, where did that thing go? Did that thing get invalidated? Oh, it did. Well, you could argue this is still valid. There's a potential setup for a W bottom on the 6-hour Bollinger Bands, which could have us pushing up to 8,800. You know, this value, this range up here. But what's okay? So what's really interesting? Let's look at the daily Ichimoku cloud actually, because this gives us some insight into the market. So if we look at the daily Ichimoku cloud, and even the 3-day, I believe. Wait, was it the weekly? Where is it? Yeah, the weekly. So if we look at the weekly Ichimoku cloud, we see that we're finding support. I mean, we obviously had this weak bearish cross up here. The Kumo isn't crossed bearish yet, but we do see we pinged right off of this 50 EMA on the weekly. So strong support there, right? This is going to be a tough cookie to crack, tough nut to crack, whatever you want to call it. But more importantly, like going back to our 44.50 price target, you know, we see there's some pretty decent support from the Kumo here. I don't anticipate breaking through this. I mean, I don't think it's ever broken through it, but well, I take that back. Maybe it'll break through it sideways, but not straight down. But we do see, so our 44.50 price target, so it's like, where is it? Right here. 44.50 is like right here. So that lines up with our weekly cloud. The 44.50 would also make sense if we just like wicked through the 3-day 200 EMA. So right now it's at 5,000. And I think No, that's moved. Okay, so disregard that. If we're going to the Bollinger Bands on the daily, we see it's getting a really wide expansion of the bands here, an aggressive expansion. In fact, like we're just trailing, we're bouncing right along the daily Bollinger Bands, and it hasn't even come close to retesting the midline. Take from that what you will, but it's not even close to rounding. The downward volatility on the macro scale is sustaining. And as we look at things like the 12-hour, you know, we see some indications that you know, it might be finding a local bottom here, but again, it's like the 12-hour is expanding, nowhere close to retesting the midline. It's just bouncing right off this Bollinger Band, and it looks the same even on the 6-hour. So something interesting to note though is for those low time frame traders, where is it? Is the 60-minute Bollinger Bands. And periods of these little trading ranges. So here's a little trading range here, little trading range here. This is the hourly. When we're in markdown on the little trading ranges, we see that it traces the 60-minute really, really well and doesn't even come close to the midline. But then it consolidates in this trading range here, and it goes in markdown again, and it stays below the 60-minute midline. So a break above the 60-minute, I'm watching this as well, so a break above the 60-minute midline and support being held there could send us into another trading range, something like this, another choppy market for about a week, maybe 5 days or so, and then you can reevaluate it from there. But right now, I'm in no position. I mean, I'm holding Bitcoin indirectly because I'm trading on BitMEX, but I'm neither long nor short. I'm watching this closely because, as I said before, we have the confluence of support on the 78, the weekly 50 EMA, which is very strong support, and the supply channel from our past. So we might get a new low out of this, but I'm expecting a bounce, and I'm expecting it to look a lot like this bro right here. I think we're somewhere in here. Have you thought more about your theory on margin longs or margin shorts that you were going to stream the other day? Yeah, I have, but I don't know that I want to go into detail about it because that's like a very meta extrapolation of like the CO's impact in the market, and I think it might be too much to cover on a stream like this. It's just a lot of material to go through, and it may just be like I don't know. I don't know that it'll be useful for the average trader. Anyway, I think we're kind of running out of steam here. We had like 160 concurrent viewers, so my audience is growing, which is great. You know, if you want to support the stream, definitely drop a like. You know, share it, subscribe it. It helps me get promoted on like people's feeds and stuff, and suggested videos. However they do their algorithm, you know, it helps. And I'm noticing it. I'm noticing that like we're getting more viewers on each stream. So whatever you guys are doing, you guys are doing the right thing. There's a question, am I a professional trader? Yes, I'm a professional trader. And I run a crypto trading, or a trading community, which you can join if you'd like to join. If you like my material and you think I add something of value to your life, you can use coupon code BEARHUG at bitcoinschmitcoin.com to join the trading community. And yeah, you're more than welcome to join. I'm starting to accept crypto payments now that I know the potential downside of the market is most likely not going to be sustained for much longer. So if you'd like to, you know, make your payments via crypto, you're more than welcome to do so. Just let me know if that's what you want to do. But in the meantime, go to bitcoinschmitcoin.com to join the Discord and participate in the discussion. And you know, talk about the trade, talk about our trades, talk about lessons learned, talk about the stuff that we covered in the stream today. It's a lot of material, but you know, with enough practice, I think anyone can grasp it. It just has to be explained properly, and that's just not feasible to do over things like the stream or on Twitter. So you know, if you'd like to join, again, bitcoinschmitcoin.com, and use coupon code BEARHUG for $50 off. Anyway, that's all I got for you guys. Thanks a lot for hanging out. We had some really good questions, really good discussion, and maybe I'll do a stream later on this week to touch base on where we lie in the current market. But for now, that's all I got. You guys have a great rest of your weekend, and yeah, bye.